All right. Good morning, Helaine. Looks like we just got the room opened up here for this week's first edition of Trade Today Live. Super excited to be sitting down here with you here today to be breaking everything down in the market that we're watching right now.
Yeah, it's good to be here, Blaine. Happy Tuesday.
Yeah, happy Tuesday to you too. And this market, the resiliency shown by this market's really impressive.
hmm
Obviously today we're getting a bit of a de-risking risk-off day, but just yesterday we continued to see the index's power to new all-time highs once again. We saw the S&P break out, I believe the Nasdaq, and I think even the Russell 2000 also hit a new all-time high yesterday. I don't believe the Dow did. I don't believe I saw that, but just seeing some really, really impressive strength and resiliency to just keep looking through the noise. There's obviously still some, noise out there with the government shutdown. Markets and investors have kind of just looked right through that and kind of turned that so far, at least, into kind of a non-story for the markets. It really hasn't affected equity prices all that much. The price action has still remained pretty strong. So, that's something I wanted to note just right off the bat, right there, Helene.
Yeah, definitely really bullish because just depending on the mood of the market, that shutdown could have been enough to really start a strong sell-off. But we, as you said, saw resiliency through it. So
Yep, exactly. And pretty much ever since the shutdown happened, markets have just rallied pretty much straight up. We had it looks like I think it was seven consecutive up days on the S&P 500 right there. So a
which
pretty
tells you you're due
significant.
for a down day.
Yeah, just on the back of that, seeing seven consecutive days of the market rallying higher, definitely due for a bit of a risk off day. It's just kind of probably looking for a catalyst, and it finally got that today. There was
hmm
about an hour and a half ago, we had a little headline move on Oracle that was a negative headline on some of their AI data center business. It was some slimmer margins than they were anticipating. So it's kind of got some more selling, more concentrated in the tech sector today. If you look across those tech ETF, some of your bigger players, in the AI space, some software names, they're kind of selling off a bit right now, just in relation to that. But overall, still really healthy trend we're seeing here in the market, Helene. I figured we would start here, hop into what I think is still probably the most important chart in the markets, particularly this week, because we have a bit of an information vacuum this week. We don't really have a lot of macroeconomic data coming out this week. Earnings season for reporting is really not we haven't gotten into Q3 reporting season yet. That's going to be starting next week, so not really much significant things to speak of regarding earnings this week. So kind of trading off these company specific headlines that come out, and then just the overall technicals of the market, and of course the rate cut story, which we're going to touch on here in a moment. But focusing right here on the S&P 500 chart, Helene, again, you can see the clear a little bit of a speed bump we hit today. Things pulled back. They had gotten a little bit over the upper Kelder channel on several occasions recently, including just this morning. We opened above it, rallied up there, hit a new intraday high again just this morning, and now we've cooled off just a little bit, but still some really encouraging technicals we're seeing in the chart right here.
Exactly. Long term, very bullish still. Even with the little pullback today, even if we see more of a pullback from here, still everything technically very bullish, very strong still.
Exactly. Yep. Yeah. So nothing concerning here. Still see a really, strong constructive uptrend. So really, really
Mhm.
liking what we're seeing at the index level broadly for stocks. And we also, just add in too, we saw the equal weighted S&P 500 break out to several new all-time highs last week as well. So that was a really encouraging sign. But Helene, I think this right here is still really, one of the most important charts in the market and for traders out there. This, of course, is the chart of the 10-year U.S. Treasury yield right here. And we highlighted this last week, and I want to bring it up again here because we're continuing to see this pattern unfold. We're seeing a series of lower lows and lower highs starting to, continue on this chart, particularly over the last, call it 5 months. And why this is so important, this is the best proxy we have, folks, for borrowing rates, particularly longer term borrowing rates. So, you're talking about, longer term business borrowing, for small to mid cap companies, you're talking about consumers, whether for mortgage or going out and seeking credit. And so that's why this is such an important chart to track here. Typically you see the yields falling on this. This is going to be a nice tailwind for equity asset prices. So, you typically see this yield falling, particularly if it's falling for the right reasons. You're going to be seeing a nice boost to stock prices, over the long term. So you can see this has been sloping down over the past 5 months. If you were to again flip back to the S&P 500 chart, you can see. That certainly has been a tailwind to stock prices. So if we continue to see this trend going right here, which technically it points to that's very likely what we're going towards, Helaine, is to see this continuing to grind lower over time, particularly if we see the Fed continue to cut rates. Obviously, they're more a little more focused on the shorter end, for 2-year Treasury yields, but the market's still anticipating seeing a rate cut at the end of the month. So
Mhm.
you can see that shown right here in the CME Fed Watch prediction tool, showing about a 95% probability the market's currently pricing in for a rate cut later on this month. So if we continue to see the Fed stay on this rate cutting trajectory, we see inflation remain under control. We're likely to see this yield continue to grind lower slowly over time right here, which will, again, be a nice boost for stock prices.
Absolutely. Well, Blaine, I think we are set to go ahead and jump into our trades for today.
Yeah, I think yeah, I didn't know if you had any other comments you want to make on that. That this is just a really important chart that folks should be keeping at least an eye on, to see what the trend of these long-term rates are. But I agree. Yeah, I think I know everybody always wants to tune in and see, obviously a lot of noise always going around in the markets, trying to find the catalyst, what the new opportunity is. And so I'll go ahead and hop into my trade idea for today. So I'll go ahead and pivot to that. And so, one thing, Helene, that's, obviously everything related to AI, it seems, what's just been really driving markets lately. That's where a lot of the action's been. If you read any financial article, that's what they're always talking about is the AI stocks, AI revolution, AI,
hmm
AI, AI, right?
Everything's AI right now. We're living in an AI
Exactly. And
world.
so I'm actually pivoting a little bit from that today. And I found a really attractive looking opportunity out there in the market, and something that is completely unrelated. So this,
Okay.
certainly one area of the market that's been a pretty big laggard this year has been healthcare. It's one that, has really underperformed broadly speaking. If you were to look at, the healthcare ETF, it's been a, pretty big underperformer. Um, but there has been, there's been several pockets within the healthcare sector that have performed rather well. And particularly of late, this is one right here. This is CVS Health. Everybody's probably pretty familiar with CVS. It's probably
Of
one
course.
on the corner, maybe just down from where you live. Who knows? But CVS, as you can see, stock has been, it's put together some pretty constructive trading. It obviously had a very nice start to the year. You can see coming off those December lows there, had a pretty substantial rally through the first 3 months, the first quarter of the year. It did, get into some consolidation type trading for the first or after those first several months. You can see right there starting, about late March, through most of the summer. It was kind of stuck in neutral, kind of consolidating. It did avoid the large sell-off that we saw in March and April, which is pretty impressive.
Yeah, it
It
looks
really
pretty
just kind of
unaffected there.
yeah, it just kind of sidestepped it and just kind of consolidated, traded sideways, stuck in neutral. But finally, just a couple months ago, really towards the beginning of August, that stock traded down. It clearly found a very firm level of support technically right here. It traded down to it for a third time. And once it hit that level of support that third time, right around 58, 59 per share, you can see just the rip-roaring rally that the stock has been in over the last couple months. It's been ripping higher. By the end of August, it was finally breaking out to new 52 week highs once again. And that trend has continued all throughout September and now into the first couple of days of October as well. You can see just this past Friday, it hit a new 52-week all-time, or excuse me, 52-week high, not all-time high, but 52-week high there on the chart. And it's very, very close to that price level once again, that 52-week closing high. So it's continuing this really strong bullish trend. See a fairly, fresh technical trend line buy signal going here too. You can see it started, about the second week of August. That red line is still above our green line there. That's our 21-day EMA above our 63-day EMA there. And despite the really strong, powerful trend in trading lately in CVS line, this stock is still trading below the upper Keltner channel. So it's still inside of that upper Keltner channel band there. So that's signaling, even though the stock is in a very powerful uptrend, it's still offering us a really attractive entry point because the stock is not signaling right now that it's technically overbought according to the chart. So the way I was actually looking to play this one, they actually are reporting earnings, Helene, later this month on the 29th. So I wouldn't look to hold this one too far, and get into that earnings territory with this one. But I
Hmm.
was looking to actually play this one with just a straight call option purchase. So just looking to buy a directional call. So I was looking a little bit in the money. I was not looking at the money or trading anything like that. But I landed on the October 31st expiration. So, several
Okay,
weeks out
couple
from
weeks.
today, just a little over 3 weeks. And specifically the 72 strike call, which you can see is currently just a touch above 6.2 points. So, about $620 to put this trade on. So I'm actually going to go ahead and take this one right here. And I'm just going to put my order in at 625, and I have a pretty good feeling I'll be able to get filled at that limit price right there. But that's my trade for today there, Helaine, is
I
CVS Health. I thought that was a pretty interesting breakout.
I like it. I really like it. Yeah, it looks like a great trend, as you said. And, after a prolonged consolidation, it's clearly breaking out. And typically, when stocks break consolidation, they break out for a prolonged period of time. So that looks like an awesome trend. And as you said, kind of taking a step away from AI and anything that could affect that, a different investment, different area.
Yeah, exactly. Yeah, it's just, somewhat for diversification purposes, right? There's so
Yeah.
many AI trades going on out there,
Oh,
so many
yeah.
different pockets of the market that are connected to that AI trade right now. This one's not. This is, really kind of entirely separate. It's a whole different thing going here. It's in the healthcare space. So it's great to see a different pocket of the market, experiencing some bullish, breakouts, some participation to the upside. And like you said, particularly after that, consolidation period for, 5, 6 months,
Yeah.
seeing a stock finally break out of that, making new 52-week highs is really encouraging.
Awesome. Awesome. Well, I love the trade, and now I'm going to go ahead and jump into my trade of the day.
Yeah, let's see what you got. I know you're always bringing some great trade ideas too, Helene. So let's see what you have for us today.
Okay, so my trade is actually piggybacking off of a trade that I had shared with everyone not too long ago, a couple weeks ago. If you've been following along with our trade of the day live, then you know that Blaine and I often are taking the trades that we recommend in trade of the day live. So on September 16th, I recommended the Shopify spread, and this was the October 17th, so this month's expiration, 130, 135 strike spread. This was a call option debit spread. It was trading at 395 at the time of the entry. Now, recently, Shopify, as you can see, is closing in. The spread is closing in on a maximum value of 5 points. The most the spread could ever be worth is 5 points. That's because the distance between my two strikes is 5 points. So 135 minus 130, that's 5. It tells me the maximum value of that spread. Looking at the current value, it's at 490 roughly, which means I am rapidly approaching my maximum profit potential, maximum potential value for the spread. So I'm going to look to exit this position. And so I'm going to go ahead and do that now with you guys. I'm going to place my limit order at 495, which is slightly above where it's currently trading, but it's been bouncing up and down today. So I want to be able to exit as close to that maximum spread value as possible, to realize as much potential profit as I can. So I'm going to go ahead and do 495. I'm going to do good till canceled. So if it doesn't hit it today, it could hit it tomorrow. That's fine. I'm going to review my order and exit out of that spread with about a 25% return on that position. Now, I wanted to walk you guys through this because I still like where Shopify is at. Let's look at the chart real quick, break it down. As we saw a couple of weeks ago, we looked at this chart when we entered this position, or when I entered the position, but looking at it again, here we are. Shopify is still on that killer buy signal with the stock currently trading above both the 35-day EMA and the 200-day moving average. Additionally, we see that the 35-day EMA is trading above the 200-day moving average, further confirming the strength of that bull trend, both in the short and the long term. And then as you can see yesterday, Shopify was overbought. It was trading above the Keltner channels, above the upper Keltner channel, meaning that it was out of that buy zone. It was overbought. It was likely to retrace. Today, we're seeing that slight retracement back into the Keltner channels, setting up an opportunity for me to enter that trade once again. Now, of course, this is a little hot still. It is near that upper Keltner channel, but it is below it, so it's in the buy zone. But also, because I'm exiting out of a previous trade, I'm rolling into this new trade for Shopify, which means I am able to take the profits from that October spread to put it towards this new spread and reduce the cost basis of this position, lowering my risk, lowering the money I have on the table. So let's go ahead. I'm looking today at the November 22nd, the 130 and 140 strike spread. This is a 10-point spread, currently trading at 8 points, meaning that I would have a 25% profit potential at that current price if I'm able to get in there. Now, keeping in mind that I'm closing out my previous spread for about $100 profit, so rolling that into this reduces my cost basis of the position by $100, reduces my risk, lowers my break-even point, which means that the stock could go up, down, or flat, and I could still profit from this spread. And that rolled over profit just makes it so that the stock could sell off even more, and I could still remain profitable on my position. So I'm going to go ahead, I'm going to place this trade. I would like to get in at 8 points. It has a fairly wide bid-ask spread, as you can see. So I'm going to go ahead and set this for, let's say 790. And if I have to adjust it later, that's okay. Um, what our team does is if we don't get filled at the midpoint, immediately got filled. We
There you
adjust
go.
the price, but I got in at 790, so I'm all set there. And yeah, that is my trade for the day.
Yeah, that's a great looking trade. I mean, Helena, I liked that you went through the whole process there too, because you were showing how the first trade worked out. It stayed, well above your profit range there for that first spread on Shopify. And then, again, you continue to like the trends continuing
Yeah.
to power higher. But, of course, your first trade is kind of coming up on its option expiration date. So,
Mhm.
you know, taking advantage of the rollover strategy gives you that opportunity to keep that exposure to that trade, continuing to have the opportunity to compound those returns, and keep benefiting, from that trend for Shopify should it continue to keep running. So great looking trade. I really love the rollover idea there. And
Thanks.
glad you're able to get filled at a good price there too. That was great seeing you get filled at that 790. So, just, same criteria, just like if you're looking for a brand new trade,
Hmm.
getting filled, within our, for a 10-point spread below 8 points.
Yeah, I
Love it.
appreciate it. And I wanted to bring up the rollover strategy because some people are afraid or maybe intimidated by rollovers. Or they, say, why are you rolling over a trade instead of entering a new position? Well, the thing is, a rollover is entering a new position. We're just saying, hey, we're so confident in the trend that we're seeing still. We want to profit more off of the stock and the trend. The trend is there. It's the same as an initial entry when it comes to how we're picking that trade. So it really is just we're showing confidence in the continued trend of that stock when we initiate a rollover. There's nothing that should be intimidating about it. It's exiting your current position and entering a new one because we believe in the continued trend of that stock.
Exactly right. Yep. Yeah, without a doubt. I'm glad you brought up that point right there. So, that one, continues to look strong. I think Shopify just hit a new 52-week high just yesterday. So,
Yes.
it looks like that trend is continuing to run on there. So I have to definitely keep up and track that one along and, see if it keeps running on further for you. But I did want to go ahead and drop something in the chat, Helene, for the folks watching at home. If they hadn't had a chance to catch the session that Chuck and I did yesterday, talking about our 60-minute income solution. Again, this is it's a free replay to watch. I just dropped a link there in the chat for you folks. So if you didn't have a chance to sit down and catch that, we did record the session. Really, really exciting session. Chuck and I were just able to sit down, talk about our favorite strategy here at the Optioneering Team. It's the one that's really been the cornerstone of his trading career. In the past 30 years that he's been trading, it's been his most consistent and profitable strategy. I can second that. It's mine. It's my most high probability, most consistent strategy. And this, it's specifically a session we sat down talking about a trading group that we have, trading service where, we're going out handpicking, this exact same type of trade, every single week in the market, sending these opportunities to you. Would highly encourage you to check that out if you have not had a chance to do it yet. So just put that there in the chat for everybody to take a look at. And I see Holland, I see you asked a question about the NET spread, the one that I had sent out, or not sent out, but rather it's featured in one of our TOD live calls a while back. So yeah, Holland, that NET, it's had some pretty volatile trading lately, which is fortunately is kind of the reason I wanted to put on a call spread for them as opposed to trade that breakout trend with them with just a directional option. I know that some of these cybersecurity players typically will have some kind of high beta, high volatility trading. And even though the trend looked really good, and I think it's going to continue long term trending higher from here, it has had a bit of a sell off lately, and today it's down about 2%. But that spread that I highlighted here, I'm still holding on to it because where I was able to get in on that spread at, looking at it right now, my entry cost was 7.65. So I am having on paper loss of about 5% right now. But that, typically my stop loss that I use on these types of trades, I'll typically hold on to them. I try to give them every possible chance, to turn around, end up becoming profitable. The trade is still in the money. The stock's trading about 216 per share right now. And I sold the 210 strike call on that one. So it's still in the money. So what that means is, if, this trade remains in the money come option expiration, then it would be set up to realize its full profit potential automatically. So just to explain that just right off the bat. But again, just my own paper loss right now is just about 5 to 6%. And so, my stop loss where I would actually look to consider getting out of this trade early is all the way down at around a 30 to 35% loss. That's where I personally typically will hold on to these trades till. Just because, I know the price for some of these spreads can swing around, a little volatility. You know, just when you have these, bigger, swings in volatility in the stock. So, I'm trying to give this trade, every chance to recover. And, again, just looking at the chart right now, I'm going to pull that up.
I was gonna say, I don't see a breakdown. Rather, I'm seeing more of a consolidation
Exactly.
um, right
Yeah,
now, which
I
for a
haven't seen the
spread is
trend break
great.
down at all.
Yeah,
Yeah, it's more just kind of stuck trading and fairly choppy, consolidation type trading sideways. So I
which
don't
is
see
good for
anything.
debit spreads, as long as they, are consolidating and not, doing a pretty substantial swing down. If they're up or flat or slightly down, then you're able to make money off of them.
Yep, exactly right. Yeah, so with that one, yeah, I'm still holding on to that trade right now. It hasn't hit my mental stop loss or anything like that. It has has a minor loss on paper, but again, it's still in the money. The trend still looks okay for it. It looks like it's consolidating, so I'm still hanging on to that one for now. But yeah, if I have any updates to that one, I can definitely talk about it here in a upcoming call, maybe later this week or next week or something like that. But definitely be keeping a close eye on it. So, Helaine, it looks like that might have been all of our questions. I don't see any other ones
Yeah.
in the chat for today. So, I probably can go ahead and wrap up today's call. But I do want to thank you, Helaine. Thanks for bringing a great trade idea and showing folks how we like to implement our rollover strategy and
Of
walking
course.
folks through that. I love the trade, of course, right off the bat. It was a great looking trade, but again, thanks for the added educational info there about the rollover. And so, folks, hope you enjoyed today's call. Hope you enjoyed watching the trade breakdown we had and seeing some of the things that we're watching that we think are really important for the stock market right now. That are really going to be either tailwinds or headwinds for equity prices. So we'll be back here on Thursday again, breaking things down, bringing you brand new, fresh trade ideas. So we'll be excited to have you back here with us in just a couple days. We'll be tracking the market's movement between now and then. But until then, I hope you all have a fantastic week, and I'll be looking forward to seeing you back here on Thursday. Helaine, thanks so much.
Thank you, Blaine. And Cindy, real quick, I just saw your question pop up. She
Oh, here
said,
we
will
go.
these trade details be posted on the website for your live TOD? The details won't be for the trade, but the replay is on the website. So you'll be able to catch it there if you missed it. But yeah,
Exactly.
Blane, thank you so much. And everyone, thank you so much for joining us today. We love having these live events with you all. We love your questions and love getting to engage with you all and show you some behind the scenes of us picking trades and managing the trades. So thank you all so much again for your time, and we'll see you on Thursday.
Yep, absolutely. Yep. Take care, everybody. See you on Thursday.